My name is Paul Kremsky. I run business development at Cumberland. Cumberland is a trading firm and a market maker. I am incredibly excited to be sitting up with these two individuals. I think it's a very interesting group we've got in here because I think that it could be argued that Fireblocks and CME have actually brought more institutions into the crypto space than any other companies. Before we dive into it, I do want to give our panelists here a chance to introduce themselves.
Great. Good morning, everyone. My name is Amy. I lead the Fireblocks business in APAC. Very briefly, Fireblocks support many institutions, going from your 2 man in a garage trading crypto all the way to some of the largest financial institutions, banks in the world, really enabling them to have a wallet, have them connectivity, and allow them to manage their digital assets in a very secure way.
Hi all, I'm Giovanni Vicioso, Global Head of Cryptocurrency Products for CME Group. For those of you unfamiliar with CME Group, we are a 180-year-old institution that has really been at the center of developing derivative products. We entered the crypto space in 2016 with the introduction of a reference rate, providing price transparency. And in 2017, we introduced cash-settled Bitcoin futures. Fast forward to where we are today. We now offer futures and options on futures on Bitcoin, Ether, most recently Solana, XRP, and just on Monday, we introduced futures on Chainlink, Cardano, and Stellar Lumens.
So guys, I know that you both want to talk about how and what your platforms bring, but I want to talk about why first. And we're talking here not just about liquidity, but institutional liquidity. Why do institutions want to come into crypto?
It depends, actually. I think for a lot of them, it's a revenue opportunity, right? If you look at institutions for trading firms, crypto presents a really exciting dislocations for them. There are a lot of opportunities here that are risk-adjusted and have really great returns. So on one hand, for the trading firms, that's what they really care about. I also would include institutions like payments firms. And I talk a lot about this historically, but really for the first time ever, payments companies and PSPs are no longer fighting over tiny basis point spreads, and money actually can be moved on chain, when historically all the payments firms are doing was just doing API inputs into a bank's infrastructure. So that changing business model also drives a lot of reasons why institutions come to this space as well.
Yeah, and I'd say it's been an interesting space, right? Because when you look at the development of crypto, it kind of really started almost kind of like person to person, right? It started with retail individuals speaking about initially Bitcoin and then carrying out to other cryptos. So it's almost like institutions are playing almost like a catch-up game. But I'd say that with some of the regulatory clarity that you're seeing in the US and globally, with some of the more crypto-friendly administrations, you're beginning to see more and more institutions enter the space. There's more conversations. We go back to 2017, there was a lot of speculation in the marketplace. There was curiosity. But now you hear more and more institutions talking about the tech, deploying the tech, but you also see more and more institutions now trading the actual cryptocurrencies.
And I remember, 3 or 4 years ago, if I would come to a panel like this and you would talk about what the hurdles are, it was a very easy point to say institutions will come into crypto as soon as the infrastructure is there.
Right.
Amy, this one's for you. Have we gotten to a point yet where the infrastructure is sufficient for institutions?
I've been in this space now almost 8 years. And I say this every single year, that yes, we are getting there, but still a lot of things remain quite challenging, right? First and foremost, I think institutions have to think about security. The reality is digital assets, if you're trading spot, is a bearer instrument. You have to figure out how to manage it. And I really thought at this point, 8 years in the industry, I'll stop talking about hacks. But last year was one of the biggest years in terms of cybersecurity concerns. That's still top of mind for a lot of institutions as they wrap their head around, what do I do with the bearer instruments and how do I ultimately get access to those? But also on the flip side, if you look at what some payments companies are thinking about, yes, previously they can just API into a bank to help them facilitate transfers. Now, if they want to deal with stablecoins, they themselves need to figure out how to do AML. They got to figure out how to comply to travel rule. And all the nuance that comes with that is a hurdle that they have to overcome. But I also think that many folks in the industry have made that relatively easy for them to overcome those hurdles so they can get into the space.
Yeah, and these are all, I think the infrastructure is there, but it still needs to be patched in, and these companies need to get used to who are the service providers, who they need to be talking to, and then they have to actually do it. And then you have this beautiful product at the CME where they're probably already hooked in. They're probably already set up. They're probably already trading on the CME. So what role do the CME futures play in the go-to-market for insties coming in?
Yeah, so great question, right? As I mentioned earlier, CME has been doing this for a long time, right? And you don't survive that long if you don't innovate, if you don't adapt, right? So our decision and the role that we play in the marketplace is, in order for these institutions to want to enter the space, they want regulation. They're going to want familiarity in terms of products, right? They're going to want liquidity, right? And those are all things that CME has been able to provide for the marketplace. So we are the leading marketplace for derivatives across 6 major asset classes, and adding crypto to that, let's call it 7 asset classes. But we've been helping market participants really manage the associated volatility and risk around these different cryptocurrencies. And when you consider, say, what happened, say, October of last year, what just happened recently, what we've seen in the marketplace is that as these stress events occur, we are seeing more gravity toward the CME products, because we're bringing legitimacy to the space. We're providing like a trusted exchange where buyers and sellers can meet. So when these events occur, we tend to see an upswing in terms of volumes. After the October 11th event, our open interest across all 4 cryptocurrencies or futures that we list went to number 1, compared even to the likes of some of the unregulated perpetual platforms, right? And something, again, that we saw just last week when we had another crash, and we once again saw we had our second best volume day just last week, and we're seeing, say, more open interest or more institutions as well as retail clients really adapting to our products.
And is that a function of open interest disappearing from some of the the crypto native exchanges, or is it people saying, actually, I want to move it over actively to?
I think it's a combination of both, right? Because when you consider like some of the issues I think in the space, perpetuals, for example, are quite popular, right? But perpetuals carry a lot of risk because there's like maybe too much leverage in the system. So when you have these events, perpetuals kind of like make that more of a cascade. So it's like a snowball effect where it just becomes a bigger issue. So you do see open interest decline on some of those platforms, and you're seeing those entities that are risk managing open interest grow on our platform.
And so I think over the years, liquidity has flowed to different parts of the ecosystem, whether it's regulated exchanges, these global crypto exchanges, on-chain, and bearing in mind that we are at a Solana conference here. It's 2026. Could you give us, and this is a question for both of you, could you give us kind of an overlay of like what liquidity looks like in general, and maybe where it's going as well?
Yeah, so I think an interesting development in the crypto markets, right, was really the introduction of spot ETFs that occurred in 2024. So now there's spot ETFs for Bitcoin, Ether, Solana, XRP, for example. And that has been a bit of a game changer, because what happened is that it allowed different market participants to enter this space. So participants that didn't want to deal with wallets, potentially didn't want to deal with any potential risk with some of the centralized exchanges, the ETF really provided a familiar product where now they could more safely, if you will, enter this space. So what we saw, and you consider, say, CME products, we are sort of at the benchmark. In addition to futures, we also have benchmark products covering now over 30 different coins. So the majority of the ETFs are based on one of our benchmarks. So that's really helped to create further gravity around our products. And all these markets are essentially interrelated. So as you see more participants trading and getting access through the ETF, it means that there's more volume on the centralized exchanges. It also means that there's more volumes on our exchange as some of the liquidity providers the creates and the redeems are relying on the liquidity of our products to support ETFs. So it's very much a very interrelated marketplace where volume really begets volume across all these different platforms.
I would say maybe the contrarian to that is there's a bifurcation where liquidity historically have lived in the crypto exchanges. Now there's a pocket of liquidity that I call the crypto world, which essentially makes up from the crypto exchanges and the DeFi platforms. And there's pockets of liquidity in the TradFi world, which is byproduct of ETFs, and then trading spot on places like Coinbase, and then the subsequent product from CME. There is some overlap in between, but actually I'm seeing more and more of those things separating because folks are trading on different platforms, they are tackling different things.
And then, for Amy, how does Fireblocks help their customers access this liquidity?
Yeah, I mean, there are a few ways, right? Number one, for a lot of our clients who need to get access to exchanges, they can use us to connect various different exchanges. But more importantly, actually, our clients are getting liquidity through our partners. So I used to give you an example. I use stablecoins as an example because it seems like a hot topic these days in Hong Kong. Majority of stablecoins are still ultimately being traded to facilitate crypto trading. And the largest crypto trading firms are using stablecoins to settle. So for us, a lot of times it's plugging in our clients to partners like Cumberland, like many others, to get them access to those liquidity, not just for crypto trading, but actually for TradFi folks who are coming to this space, doing payments use cases, doing corporate payment use cases, and so on and so forth. So that's actually where we're seeing a lot of the connectivity happen as well. And the other point of view I see quite frequently now is this concept for institutions to get access to DeFi, right? I think we talked about DeFi always. Now I feel like DeFi is back on again, where clients and customers are getting access to a lot of DeFi flows and doing lending and borrowing through DeFi platforms in a pretty decent size than a few years ago.
Yeah. One thing at Cumberland that we find on the OTC side is that folks will do a trade with us, and they'll say, when can you settle? And we'll say, we can settle tomorrow when the bank opens.
Right.
And then they'll say, well, can you do better? Yeah, we can. Let's do this trade against USDC or USDT, and then we can settle it in 30 seconds. Let's highlight some of the differences, because we've talked a lot about, OK, this is what the TradFi world looks like. This is what the crypto native world looks like. What are some of the key differences? And is the gap going to close, or is the gap going to persist?
I think there's a convergence happening. What I mean by that is essentially you've got the TradFi folks trading crypto product in a crypto wrapper, and then you got the crypto guys trading TradFi products wrapped in a blockchain wrapper as well. And if you go and talk to some of the biggest, call it crypto native firms, and you see their last round funding and what they spoke to their investors, it's 100% about taking their expertise, their pipes, and their structure when it comes to blockchain access, and then ultimately trading traditional products. So that convergence is already happening. I would think that if you look at what TradFi firms are used to, not many of them are used to trading 24/7 industries, right? If you look at what happened recently, where some of the U.S. stock exchange settled into T+0, and all the Asia guys just completely panicked. Like, what do you mean you're gonna come in on a Saturday to settle trades, right? So that the reality is most of the TradFi world don't really run on 24/7. So there's that big learning curve that we see happening right now, where the two things are converging.
But I'd say, when you look at 24/7, obviously crypto markets are already 24/7, and I think that TradFi just has to get there, right? And I think that it's inevitable that TradFi markets will move to 24/7. In the case of CME products, we have already announced that we are going to offer, say, our crypto futures and options. We are going to be extending those to 24/7 trading. We anticipate that to go live sometime in early Q2.
I mean, I would say be careful what you wish for.
Yeah.
I used to trade commodities, and I traded Eurodollars in the CME, and I also used to have weekends, and that disappeared when I joined the crypto industry.
I hear you. But it is a way of the world now, right? And initially, for us, it's crypto initially, and we'll see how clients want if clients say want to trade other asset classes 24/7. It's something that we'll keep our eyes open to.
And this is for both of you, how do you decide what products to build for your clients? Gio, you mentioned you just added several new coins. Amy, I know that your products team is amazing.
Yeah.
How do you guys prioritize, like, okay, this is the thing that people are asking for that we have to build?
A few ways, right? I think number one, customer demand is definitely the most important thing. Like, we don't really build anything unless there's sufficient customer demand. But also, we think a lot about engaging with our customers, which are very innovators, and asking them, like, what do you guys need 12 months, 16 months? Like, what do you see the trend is happening to make sure we're future-proofing a lot of our product stack to support them as this journey goes on? And I'll give you an example. Back in 2020, we actually were one of the first platforms to launch DeFi access. And nobody cared, honestly. It was the volume was so little. We told guys, hey, listen, you can access the DeFi with this Uniswap thing, it's amazing. And our clients were just like, yeah, I'm not making any money on it, I don't really care. And then somehow in 2021, everyone cared about it, right? So there's that element of figuring out what's next, and what do people really care about. But at the end of the day, I think it helps that we have lots of customers spanning across the whole entire industry, and many of them are actually giving us ideas on what they're seeing as next and what they expect their wallet infrastructure to be able to support as they continue to tackle revenue opportunities for themselves.
And I agree with what Amy says, right? For us, we're always listening to clients and really trying to introduce products where there is that client demand. But being a regulated entity, we also need that regulatory clarity, right? And if you consider, we launched Bitcoin in 2017. There was certainly clarity there from both regulators in the US, but it took us another 4 years to launch Ether, another 4 years to launch Solana and XRP, and then, recently launched 3 additional. So we need to have that comfort. So it's regulatory comfort first, client demand second in terms of how we decide to launch these additional cryptocurrencies.
And I noticed recently that, you have 7 products that are listed on the exchange, yes, but 3 of them just came this week. So you've almost doubled the product set just this week. That's an acceleration. Is there something in the water? Is it the market's getting bigger? How did you guys come to this point?
Yeah, I think what we've noticed in the marketplace is that, institutions in particular, right, you still see a lot of gravity toward Bitcoin. Bitcoin, in terms of market capitalization, is, between 50, 60% of the market. But what we started seeing last year, particularly after the passage of the Genius Act in the US, we started seeing more interest in platforms and coins such as Ether, Solana, as those platforms help to facilitate, say, stablecoin issuance, for example, right? So we really started seeing more interest beyond Bitcoin and into some of these other coins. In fact, Solana and XRP were our most successful crypto launches, where those products, in a matter of months, went from 0 open interest to over $1 billion in open interest. And they did that much faster than Bitcoin, much faster than Ether. And I think that's a trend that's going to continue, where we are seeing institutions as well as individuals really look to diversify across the crypto space.
And I think we've talked mostly about futures here, but you guys also have options products. And how are your customers using those options products?
Yeah, so great question. So we introduced options on Bitcoin in 2020. I think when you look at the options market for crypto, it does tend to be a small market. And I think part of the reason for that is because of the existence of perpetuals, where a typical retail investor who's looking, say, for that leverage would trade an option. But now you've got a perpetual that could offer you, in some cases, 100x leverage. I'm going to trade that product versus an option. But we are beginning, options are a tool that make a lot of sense, particularly when you consider, how volatile the asset class is. So we are beginning to see institutions now begin to show interest in options, right? Well, we're doing about $200–300 million a day across our option suite. And just this past week, with the rise in volatility, I think we saw like a 3x increase in options activity compared to where we were last month.
Okay, and you mentioned stablecoins here, and Amy, I'm going to do this is for me, this is my live market research. What are your customers looking for when it comes to connecting with the market and utilizing stablecoins? And frankly, how can a service provider like Cumberland make a better product? And I'm doing market research as well.
I think stablecoins, for a lot of our banks or payments customers or corporate customers, for them, I think they talk a lot about trust, but actually it's not about trust, it's about liquidity. Because ultimately, if you can use stablecoins and you can spend it immediately 24/7 all the time, you actually can adjust the counterparty risk quite efficiently for these payments customers. So for them, they need to figure out, how can I get access to stablecoins? How can I sell it? How can I sell it 24/7? And how can I sell it in size? So a lot of times, what I'm seeing from some of our payments customers, when they first started off, they may be happy working with other PSPs to enter into a new market because maybe they don't have a license to operate at that point. They're doing small volume, and really the basis point doesn't really kill them in the end. But the second they start doing something like $100 million a month in volume, then they're really getting into the basis point game, and they need to find liquidity providers that can do those sizes to them consistently in the market that they can get access to. The other thing I would say also, there is a bit of debate right now for stablecoins around people doing third-party payment, right? Like right now, everyone can do first-party. Like if you and I buying stablecoins, no problem. But more and more these use cases, clients are asking, can I do third-party payment? And how do I facilitate those? How can I get local banking relationships? How can I get access on and off stablecoins to a fiat rail that is in my jurisdiction so that I can ultimately finally settle? Because the stablecoin industry right now is very like half, call it access. There's usually one leg that needs to be off-ramped or on-ramped somehow for them to utilize this. So those are the kind of the two things that a lot of institutions are asking for.
It's good food for thought.
Yeah.
Guys, I really wanted to thank you both for taking your time to come here to participate in this panel. This has been a lot of fun. And for the crowd and for Solana Accelerate team, I wanted to thank you guys for spending time with us as well. So.